Many real estate investors and business owners are quietly overpaying the IRS every single year, and they have no idea why. In today's episode of the Tax Strategy Playbook, we're going to show you how to stop doing that. I'm your host, David Wiener, and my guest today is Greg Taylor with Taylor Tax Strategy. Greg and his team help investors and entrepreneurs use the tax code as a wealth building tool instead of just an annual bill.
Welcome to the Tax Strategy Playbook, the show where smart investors, business owners, and real estate pros learn how to win the game the IRS wrote. Each episode, we break down powerful strategies, expert insights, and real-world examples that help you keep more of what you earn. Because here, it's not about working harder, it's about working smarter with your taxes, because tax evasion is a crime, but tax avoidance is mandatory.
So let's get right into it. Greg, thanks for being here.
Absolutely. Thanks for having me.
Greg's a good friend, Greg's a colleague, and he's the founder of Taylor Tax Strategy. So in one sentence or two, how would you describe what Taylor Tax Strategy does for clients who are tired of overpaying taxes?
Yeah, a big thing that we do that I think is different from a lot of accountants and CPAs is we are more proactive about planning. So we are asking our clients to meet with us. We're sending reminders, we're sending text messages and emails saying, please schedule a meeting with us to talk about your tax needs.
Fantastic. I think the extra touches really help. People seem to appreciate that. Give us the Reader's Digest version of your journey. How did you end up so focused on real estate and tax strategy?
Yeah, so I grew up around real estate my whole life. My parents, grandparents on both sides, aunts and uncles, almost everybody in my family has owned real estate. And so for me in college, I bought my first rental and rented out the rooms to my friends. So real estate has always been really, frankly, a part of my life growing up and then income producing for me from a young age. And then I got into the accounting and tax world and just saw kind of how they met together to really help you save on your taxes. And so it's been,
Was there a specific moment where it just kind of clicked that the tax code could be an offensive wealth building tool, not just a bill to pay?
yeah. I think it was really probably the first time I started putting depreciation on my own tax returns. And seeing that, I had my first couple returns and I was like, wait a minute. So I get to like take this loss against my other income? Like, how does this work? And is this right? Those kind of questions.
So, who does Taylor Tax Strategy work best with? What kind of investors? What kind of business owners?
So mostly we're working with blue collar business owners. So like service based, type businesses, real estate investors, wholesalers, flippers, that kind of thing. And so one of the hardest ones, honestly, is the wholesalers because they don't keep anything, right? So we don't have the depreciation. So it's a hard hurdle sometimes for me to convince wholesalers to keep a couple properties and burr them or just buy a rental and keep it for the tax savings.
So you see a lot of different kind of clients. What are like the top three ways you see that real estate investors or business owners are quietly overpaying the IRS every year?
So one thing is just not keeping track of things. They don't keep track of all those expenses that happen. And so things just fall by the wayside. Another one is, especially with people who are doing burrs, they don't think about the types of material that they're putting in their property. And as you know, ceramic tile is a long-term depreciation. Wood flooring is a short-term depreciation, right? And so certain things, if you want your property to look a certain way, you can make choices one way or the other that can significantly affect the depreciation.
And you help out with that.
Absolutely. Yeah, we talk through that as they're doing the thing. Another big thing that will hurt some property investors is they'll buy that beach house and the land is a lot of the value of that beach house and it's not actually the building structure. And so we talk through how all properties aren't created equal. Multifamily, is going to have more kitchens and bathrooms, which is going to give you the specialty plumbing and the cabinets and all that stuff. So all those things really matter when we're looking at what they're investing in. So
Now, you mentioned a burr. For those who might not know it, go ahead and define what a burr is.
so let me see how many R's because it always catches me off guard. So it's renovate, rent, refinance, repeat. So there's 4 R's in it. And it's basically the idea that you're buying that house, fixing it up, and then getting your cash back out of it so that you can do the same thing again to the next property.
Fantastic. Can you give me a real life example, no names, obviously, of
Sure.
an investor who was overpaying and what you found when you looked under the hood?
Yeah, so one really good example, it's one of my favorites. There's a lady who is a real estate broker. So she has significant income as a broker, but she's also a real estate professional. So all of the, deductions for depreciation and rental properties. She came to me 5 years ago now, and she had prepaid about $120,000 in taxes, like estimated tax payments. And she came to me in March or April, right after kind of that tax season was over. So we had a good portion of the year to work together that first year. And that first year, we actually only used, it was like $3,000 of that 120. So the rest of it, she's kind of funny. I was like, why don't you take that as a refund and buy another rental? She was like, I have money for the rental. My goal is to never send another check to the IRS again. And
And
so
it's possible.
we've been carrying that forward. She is now down to 97,000 left. So 6 years. So we've used up 30,000 over 6 years of that. And her goal is to retire without sending them another check, just by taking this strategy and basically continuing to carry that money that's sitting in there forward every year.
It's got to be aggravating to you when somebody says, I'm not paying for all that strategy stuff. I'll just let my CPA take care of it.
Yeah, I mean, we often hear that. One of the things that we've been hearing lately as people do sign up with us is nobody's ever done that for me before. Nobody's ever talked to me about this. Nobody's ever told me this. And one of the pieces of advice I give new entrepreneurs when they ask me what's the best tax advice, I always say the same thing. I say know the difference between a tax preparer and a tax planner or strategist. Because what happens often is CPAs that are doing your taxes only and talking to you only in April, it's not that they're incapable, but they have a different focus for their business, right? And their focus is prepare your taxes. And so they may give you a strategy here and there, throughout, when they're reviewing your return, but they're not in your life regularly. You're not asking them to meet. They're not asking you to meet. And so a planner, a strategist is really going to focus on that on a regular basis with you.
And I, in my work doing cost segregation and those kinds of things, I see a lot of people who work with CPAs that are not familiar with real estate. And I think
Yeah.
it's really important, and I think you'd agree, it's really important for a real estate investor to have a tax strategist and or a CPA who is very versed in real estate and the different tax angles from real estate and that sort of thing.
Yeah, I've had people come to me or get on webinars where there's Q&As, things like that, and say, "Well, I don't own commercial property, so I can't do a cost seg." And, so you'll hear stuff like that. And it's just, they heard from their CPA who maybe didn't know how to do it, maybe wasn't comfortable, thought that it was too risky, whatever the case may be. And so they have bad info, or they frankly maybe heard it years ago and, the rules might have changed for some of the things. So yeah, so I think it's important that you have somebody, and the opposite is also true, right? I had somebody come to me and they were a drop shipper for Amazon. And they said, "Hey, can you help me with tax strategy?" And I said, "I can give you basics, but I don't have any drop shipping clients." And so I guarantee you, I'm going to miss some stuff that somebody who's really familiar with drop shipping is going to be able to advise you on. So yeah, it's important to just stay kind of, frankly, in your lane with this one.
Know your niche.
Yep, that's right. So.
So let's shift a little bit from problems to solutions. If somebody listening realizes, yeah, wow, I'm probably overpaying my taxes, where do you start with them at Taylor Tax?
So we're gonna first look at last year's return, not necessarily to criticize whoever did it, and things like that, but just to see what might be there, right? And so a good example is, if they're in real estate, is did they do cost segregation studies, right? That's a very easy one. Did they have the accelerated depreciation? And so that's one of the things we're going to look at first. The second is, are they even categorizing all of their expenses on their rental property? So for real estate, there's a couple things I always look at on the Schedule E if it's a personal return. And I want to make sure they have interest listed, taxes, insurance, and depreciation. Those four should be on every single rental property unless they don't have a mortgage on it. And then the interest would be gone. But so we kind of do quick reviews there to just see what their situation is. And then we talk through how advantageous rental property can be for the taxes if you do it right.
So would you say those are the biggest two or three tax levers that somebody who just has their first property or one or two properties needs to understand right away?
Yeah, absolutely. You want to make sure that you have those four things. So you have interest, insurance, depreciation, and taxes, property taxes on your Schedule E, where your rental property is listed. You want to make sure they're putting that on there. And then beyond that, I really look at repairs, maintenance, and utilities if it's a short-term rental.
I love hearing the stories about your clients. So give me a practical example of how better planning, whether that's choosing the right entity or depreciation or something else, changed the numbers on a real client situation, other than the one you told me.
Yeah, so I have a client that I met with towards the end of last year. They signed up with us and we reviewed their return. And I don't normally go this far throwing their previous person under the bus, but this was a $125,000 mistake. So I was like,
Ouch.
you gotta go back to this guy. So he went back and the other CPA and did a very great job, acknowledged it, filed the amendment for free, like it very, very much took ownership and did the right thing. So, but we were looking at it and literally it was going through those. They have multiple properties. And I said, hey, this one doesn't have insurance. Did you have insurance on this property? This one doesn't have interest. Did you have interest? Did you have a loan on this property? And it was literally just those top four that are my low hanging, quick things that I look for. And so they were able to, by doing all those on multiple properties, they were able to then have a pretty significant loss that was just missing.
So if a listener to this takes nothing else from this episode, what's the first thing they should do in the next 7 days to improve their tax situation?
Yeah, I think make sure that you have proper records of all of your expenses and that those get on your tax return. So we're coming up near tax time right now, and so make sure that those things are all listed on there.
And the easiest way to do that is like something like QuickBooks, or what would you recommend?
Yeah, you could use QuickBooks if it's just rentals, if it's long-term rentals. I don't know that you have to do that. There's some other free softwares out there. I think Stessa is the name of one that some other clients use for just rental property management. And there's some other, discounted ones if it's just rental property management that frankly, if you're not an accountant and you only have rentals, probably go with something that's more rental focused than even QuickBooks is.
Okay, so Stessa is the name of one.
Yes, Tessa's one. There's a couple others you can just really Google. And then honestly, what I do when I'm looking at new softwares before Googling the software, I use YouTube and I look for like which one has the most instruction videos for how to use it. And that's how I kind of pick. Or I look at reviews, video reviews.
That's actually how I picked how I was going to record my podcast. So it works. If
Yeah.
somebody books a planning call with you,
Mhm.
what do you want them to bring to the conversation so that it's truly strategic and not just about last year's return?
Yeah, so definitely we want to know kind of how last year was looking. We want to know if you can what status you are. Like, are you a real estate professional? Do you have an S corporation? Is this a partnership? Those kind of big bucket things. And then from there we can begin to make a plan and see what you qualify for. So for example, if someone comes to us and they say, hey, I'm a physician and I work full time, as a physician, I make 500,000 or whatever a year and I have these long-term rentals, what can we do? My first question is going to be, are you willing to buy short term? And if the answer is no, then honestly, there's not much we can do in the real estate game. So we've got to look at other strategies because the offsetting doesn't allow it. A lot of the things, honestly, on that first call, you will know off the top of your head. So really it's making sure you have access to a copy of your tax return in case we ask a question about how you're filing or what you're doing. And then we're able to look at that return and see what it says.
And you like to meet regularly with your clients, right?
Yeah, absolutely. So the way our company is structured is we have what we call a strategy and accounting representative, and they also do accountability. So if someone signs up for a full package with us, they would meet with me quarterly. And then the other 2 months of the quarter, somebody's going to check in. David, if you were a client, they're going to check in and say, hey, David, Greg told you to do that thing for strategy. Did you do it? Did it happen? Questions. What is stopping you from doing it? So
Big brother Greg is watching.
that's right. We're batting 1,000 on saving people more than we bill them. And so we want to be able to say that 5 years from now as well. And part of that is the accountability that we provide.
That's really important. Say that again. You
So we're
want you
batting 1,000 on saving people more than we bill them. So every client who has stayed with us for the year, we are saving them more than they have been billed, or we've told them that they need to move on from us because they're not willing to do the strategy and they're wasting their money. So we do tell some clients that because they just either don't have time, capacity, it just doesn't make sense. So I'm not
well,
looking to just bill people. I want to be a profit center in their company.
fantastic. Yeah. And I've referred a bunch of people to you for that very reason,
Yeah.
because it's not going to be an expense. It's an investment in
Mhm.
strategy. And you're going to, like you say, make them more than you cost them.
Right.
You've referred a bunch of people to me for cost segregation and those kinds of things.
Yeah.
And we try and do the same thing. And you and I both, if we talk to somebody and it's not right for them,
Yep.
and we ask those questions, we're not going to try and push them into something that they don't need. I hear from a lot of people who say, no, I don't want to do the strategy thing because it's too expensive. I can't afford it.
Uh-huh.
And I tell them, you can't afford not to do it.
Right. Yeah. If
And
you're making couple
that's the
hundred
whole
a
reason
drop.
for this podcast.
Yeah.
People need to know tax strategy. They need to know the things that they don't know. They need to know the truth about some of the things that they probably have misconceptions about. So if somebody's an investor, small investor, large investor, a business owner, and they're thinking, I don't know if my CPA does this or not, what should they be asking their current CPA or tax pro to see if they're really getting strategy and not just compliance?
Yeah, I think honestly that's the big question right there is, do you provide strategy services? And then, you'll a lot of times, and I had somebody actually just sign up with us, and this week they text me and they said, well, I met with my current CPA, or my, the one they were transitioning away from, and he said that he could do that. And I said, but is he going to do that? Like, he can do it, but is he going to? Like, is he available? And so I think it's really about the availability. And so a lot of accounting firms, tax prep firms, CPA firms, they're really swamped during tax season. So, and we really specialize in having our focus. It's not that we don't have heavier days or, things like that, but um, I mean, I haven't done a single tax return this year. It's, I don't know, the middle of February. And so, and I don't plan to do one. Other than my parents, right? Like I'm going to do mine and my parents, and that's about it. But that's because we have a team that prepares taxes. My role is make sure the strategy happens and run the company and things like that. But my role is making sure that the strategy happens. And so we have people on staff that are doing each of those specific things. And when you have sometimes teams that are more focused on tax prep, you just have a bunch of preparers and they're just trying to crank out those returns. And they don't have the time, they don't have the bandwidth to check with people and give them strategy. So,
And I can speak from experience because I've worked with almost everybody on your team, I think, at some point. Greg's got a fantastic team that does everything that needs to be done. So let me ask you a few quick fire questions.
yeah.
What's one tax strategy you wish more real estate investors knew about?
Oh man. Well, I'm a big fan of short-term rentals right now. I know a lot of people are saying it's dead and boutique, is the way to go, boutique hotels and things like that. But what I like about short-term rentals is if you don't sell that, you don't have depreciation recapture. Even if you move it to less short-term rental, more second home like, you still don't have the depreciation recapture. So you can buy this eventual retirement or second home right now, rent it out, get it paid for a while, get the tax advantages, and then 10, 15, 20 years from now or whatever, it can become your second home or retirement home. So I really love that as a part of the plan. And then I think just knowing the difference between multifamily and the benefits of that from single family can be really, really
Okay.
helpful.
What's a common piece of tax advice you see online that absolutely makes you crazy?
I don't own anything. My trust owns everything. I won't call out the guy who said it, but that is really frustrating to me because what happens is all these people who aren't multimillionaires, maybe nine-figure millionaires like this guy, are trying to then set up all these trusts. And they're doing it hoping that it's going to save on their taxes, and it's really complicating their tax returns and not really saving them money.
Okay, one more thing, and I think I probably know the answer to this question. Finish this sentence. The investor who wins on taxes is the one who,
Is buying real estate.
there you go.
Yeah.
Greg, this has been fantastic. For
Yeah.
people who resonated with what you shared or want more information, what's the best place to find you and Taylor Tax Strategies?
Yeah. Honestly, just our website, taylortaxstrategy.com. And we're on Facebook as well. So
Do you have any kind of resources that would be a good next step for somebody who wants to dig a little bit deeper into this?
yeah, I think if you want to dig a little deeper and figure out kind of what makes sense for you, I think honestly, just learning more about cost segregation is really going to help you to understand how the strategies can play in, and then you get somebody like you and I to help them apply that in a way that is meaningful on their tax return.
And I'll put all of your contact information into the show notes and the description. If you're listening and you got value from this conversation, do me a favor. Subscribe to the Tax Strategy Playbook. Comment with any topic you'd like to see covered on future episodes. We mentioned a few of them today. We're going to be talking about a deep dive into cost segregation, bonus depreciation, those kinds of things. And then share this episode with one investor or business owner that you know is probably overpaying the IRS every year. And if you'd like to explore tax strategies like cost segregation or 1D or R&D for your own business or your properties, you can always contact me. My contact information is directly in the description. Greg, thanks again for being here. Thanks
Absolutely.
to all of you for listening. We'll see you in the next episode of the Tax Strategy Playbook.
Thanks for listening to the Tax Strategy Playbook. If you found today's strategies valuable, be sure to subscribe, leave a review, and share the show with someone who wants to play smarter with their money. You'll find more resources, tools, and expert tips at taxstrategyplaybook.com. After all, it's your money. Keep more of it.